So with that, I'll move into our next speaker introduction. This deals with sorghum production, supply, and demand by Dr. Mark Welch with Texas A&M University. The topic is today's sorghum market in the USA. Dr. Welch is an economist with Texas A&M Extension Service and a professor in the Department of Agriculture Economics, specializing in grain marketing. His research encompasses all stakeholders in the grain industry, particularly in risk management and market analysis. So with that, Dr. Welch, welcome.
All right, thank you. All right, appreciate that. Well, thank you very much. It is an honor to be a part of a meeting like this, and I certainly would like to thank those associated with the Texas and U.S. sorghum industry for the opportunity to share with you today. What I would like to talk about is some of the issues related to the supply and demand prospects and price outlook when it comes to grain sorghum. And I want to highlight this statue. This is on the grounds of the Federal Trade Commission in Washington, D.C. This statue was commissioned in 1934. In the late 1920s, early 1930s, of course, the United States and much of the global economy was entering into a depression. Economic conditions were deteriorating rapidly. In response to that, the U.S. Congress in 1930 raised tariffs in order to protect the domestic U.S. economy, penalizing our trading partners around the world. Then in 1934, under President Roosevelt, they began to back off and rescind much of many of those trade barriers, opening once again the U.S. economy to global trade. And out of that environment then, this statue was erected. And you see this man struggling with a very powerful horse. I appreciate this statue. I grew up around horses my entire life. And so I understand the value and the potential asset that a large, powerful animal like that can be to the success of your operation. In fact, if you take an animal like that and you can harness its power and its potential, it can become very important for the profitability of your farm or ranch. The opposite is also true. If you take that large, powerful animal and it is not trained, in fact, if you abuse an animal like that, it not only becomes less of an asset, it becomes dangerous. And it becomes debilitating for the success of you personally, as well as for the success of your farmer ranch. And so I think that epitomizes much of, at that time, what we're trying to see in the U.S. economy, recognizing that trade was a powerful tool, but it had to be managed and handled appropriately. And so that's going to form the foundation of much of my talk here today when we talk about U.S. sorghum and the importance of trade in the success of the U.S. sorghum industry. That's what a schematic looks like of any grain market or many commodity markets in general. We'll have the components of supply on one side of the chart. We have the components of demand on the other. And then when you look at it, you put the supply and the demand in some kind of balance, then all those factors interact to achieve some type of equilibrium price. Pretty simple. What we're going to look at over the next several minutes is, are there particular aspects of that schematic that apply more directly to U.S. grain sorghum, particularly in determining the price component when it comes to U.S. sorghum. This chart shows the growth in global per capita grain consumption going back to 1970. Now this is per capita. This is not total consumption. This is the consumption of food and feed grains on a per capita basis. Now there's also feed grains, food grains, and you'll notice there's one other. Soybeans. There is one oil seed in this component as well because, of course, soybeans are such an important component of U.S. agriculture. But I think it's fascinating to note that we were in a period of flat consumption globally for some 30 years. And then in the early 2000s, prior to the passage of the Renewable Fuel Standard, which drastically increased the production of grain ethanol in this country, we began on a trajectory of much higher grain consumption around the world. There was a pivot point in the early 2000s, and we have continued on that rate of growth since that point of time. The concern in the current economic environment is the degree to which this particular level has plateaued to some degree, has leveled off to some degree in the last several years. And in fact, this year's projection for the 2019-2020 marketing year, that projection is slightly below that trend line value. Marginally, but it is below. So are there warning signs that perhaps that rate of consumption is starting to change? And so that's something that we'll be watching very, very closely. This is growth in world trade exports. Again, this only goes back to about 2010. But again, we are seeing some leveling off in the total quantity of global trade when it comes to grains. Again, these are the same grains from the previous slide, the same mix that you'll see in this particular slide. And in the last 3 or 4 years, we've kind of started to level off. Again, are there some concerns in our ability to promote and expand trade on that global stage? Now, let's go back to that. I'm going to go back to this slide. And now I'm going to show you what I think is a key contributor to the growth and supporting this particular trend line when it comes to grain consumption. The red line is grain use per capita. That's the same line we were just looking at. The blue line, which is highly correlated to that red line, is the growth in average incomes in emerging and developing economies. You can see as those economies began to grow and expand in the late 90s and early 2000s, as the wealth in those countries expanded, as average incomes began to grow in this part of the world, that drove consumption of things like feed and food and fuel and fiber. All good for what we do in U.S. agriculture. And so the degree to which we can support that growth in per capita consumption is tied directly to what happens in growth in those global economies. Now, the global economies of that blue line, Brazil, Russia, India, China, Mexico, and then a cluster of other Southeastern Asian nations, Indonesia, Vietnam, the Philippines, Thailand, and Malaysia. Those 1, 2, 3, 4, 5, 6, 7, 8, 10 countries, half of the world's population in those 10 nations. And so as those economies do well, as those consumers do well, U.S. agriculture does well. As those economies slow down, as those economies struggle, U.S. agriculture, when it comes to the global export market, will continue to struggle. So I think, again, that correlation is very important to keep in mind. These are estimates of global economic growth that are issued by the International Monetary Fund. And you'll see several lines here. The green lines is the global economy and the projections then for 2019 forward. You'll see the blue line. Those are estimates for the developed world, United States, Europe, Japan, Australia, those nations. And then if you look at the emerging and developing economies, those will be the red lines. Again, notice, when did those emerging and developing economies, when did they begin to grow at rates that really drove global growth when it comes to economic advancement? The late 90s and early 2000s. That's when they began to separate themselves from the rest of the world, driving global economic expansion in those economies. The latest projection from the IMF, this is in April. They will update this information in October. Down for the advanced economies, down for the world economies, and down in those emerging economies. The little black line, that was the estimate for growth in those economies in April of 2018. before the trade disruptions and trade dispute with China and many of our other trading partners began to escalate and expand. So prior to the current economic environment, estimates were for those economies to continue to grow, to expand beyond where they had been the last several years. And again, we're seeing now the result of much of the disruption to that. We're seeing lower estimates of growth in that part of the world. So if we look at a threat, again, to our ability to contribute positive to U.S. agriculture from global trade, I certainly think there are some concerns on the horizon. We're talking about sorghum. We're talking about a feed grain. In the U.S. feed grain market, of course, it is dominated by corn. We'll look at production in 2019 of almost 14 billion bushels of corn and some 354 million bushels of grain sorghum. So it is a relatively small component of the feed grain market. And so it's not surprising if you look at price patterns, corn will set the tone or the direction of grain sorghum prices. These are prices on a monthly basis that go back to 1989. And you can see the degree to which sorghum in the red line, corn in the green line, certainly they move together over that period of time on this monthly basis. So one certainly sets the pattern for the other. And so grain sorghum will follow along with the price of corn. So how do we determine then the price of corn? This scatter plot shows the relationship. This is the price of corn and the price of grain sorghum on the x-axis, corn and grain sorghum. Those are average prices paid to the farmer. So those are real farm prices for the marketing year average. Along the, that's the y, along the x-axis, you will see the stocks to use ratio. You take the level of ending stocks at the end of the marketing year, divide that by how much were used for the entire year, and the lower that carryover number relative to use, you have a tighter stocks use number and higher prices. If you have a more abundant level of stocks relative to use, then you have a lower level of prices. If you can tell me what the stocks to use ratio of corn is going to be this year, I can give you a pretty good estimate of what the price of corn is going to be. There's a very strong correlation between that stocks to use ratio and the price. It fits very well for corn. And as a grain marketing economist, I like an R square of 83%. You have a very high degree of information about estimating where that price will go. Look at grain sorghum. These are grain sorghum prices using the stocks to use ratio for grain sorghum, and you see a very, very, very low correlation, much less predictable. So in other words, grain sorghum prices are following what happens in the fundamentals of the corn market. Grain sorghum prices are not set by the fundamentals in its own market, primarily. This is what the supply and demand chart for grain sorghum looks like with the latest estimates from the United States Department of Agriculture. These came out in August. And then just comparing the current marketing year, the crop that we're going to harvest for 2019, compared to the last, to 2015. So we'll go back 5 years ago. So the 2015 numbers compared to the current numbers. You'll see that total supply is down 33%. We're planting less grain sorghum. The total supply has come down. In terms of domestic use, actually we've come up a little bit. We're feeding a little more grain sorghum. We're using that grain sorghum for ethanol. But the export picture is the one that's changed most dramatically for grain sorghum. Since 2015, down over 70%. So supply is down 33%. Use is down 38%. The stocks to use ratio for grain sorghum, that 6% number, has now more than doubled to a 15% stocks to use ratio. The level of supply of grain sorghum has doubled relative to its use in the last 5 years. But if you look at the price of grain sorghum in those 5 years, really hasn't changed that much. And so again, that disconnect between what you would look at the supply and demand factors for sorghum in terms of determining its price. You need to look at what's going on in some other markets. There's another look at our sorghum use categories, again showing the degree to which we've lost much of that export market, how it's declined over the last several years. And now it's come back a little bit. Our exports are actually up a little bit this year. Feed use is coming back up. And so we're seeing some growth in those domestic categories, even as we've lost much of that export market. So now what we're going to do for the rest of this presentation is look at the three primary use categories for grain sorghum. We'll look at feed, we'll look at fuel, which is food, seed, and industrial. Primarily that's ethanol. And then we'll look at the export market. And are there opportunities for growth in any of these particular use categories? Looking then for potential that might add to on the demand side when it comes to grain sorghum. So we'll look at those three in particular. We'll start with feed. This is a terribly complicated slide, but I think it's an important slide, so I'm going to walk through it a little bit. Okay, what we have. This is the U.S. livestock industry on the left. The U.S. livestock industry measured in grain-consuming animal units. You can see, and that is what these shaded areas represent. The dark areas at the bottom, that's the U.S. beef industry, dairy and cattle. The red bars is the U.S. pork industry. The yellow arrows at the top, that's the U.S. poultry industry. Over the last 5 or 6 years, you can see the dramatic growth when it comes to the U.S. livestock industry. We're currently at all-time record highs, and these are animal units that consume grain. They're on feed. Grain-consuming animal units. Sharp growth in the U.S. livestock industry. That ought to be good for what we do as we're producing a feed grain. The green lines indicate how much grain we feed to a particular animal unit. So per grain-consuming animal unit consumption. The green line is grain. The dotted green line includes dried distillers' grains, DDGs. So when you combine distillers' grains with grain that's actually fed, that brings you the green line on the top. Look what has happened as grain-consuming animal units has increased, grain per grain-consuming animal unit, energy feed per animal unit has gone down. So we're seeing growth and expansion in the U.S. livestock industry, particularly pork. Pork is expanding very rapidly in the current environment, certainly with concerns of swine flu and problems around the world, particularly in China. U.S. producers are recognizing this may be an opportunity for them to expand and capture some of that market. So we're seeing expansion in the pork industry, but we're becoming more efficient on how much grain we feed those animals. So just because we're seeing growth in the numbers of animals, that may limit how much feed we're using to feed those animals. So there's some balancing effect. But if I'm looking at a more positive area of feed grain demand in the near term, it's livestock. It's the feed category. Now, we'll see competition from other grains, not just corn and grain sorghum. We're feeding more wheat. We have very low wheat prices in this country right now, and we're feeding more wheat. Has become a feed grain in many areas, not primarily a food grain. And that's a problem for our wheat producers. But I do think we will see increasing livestock numbers, but perhaps a moderate impact on feed grain demand. But the potential is there. Ethanol. That black line shows weekly ethanol production in the United States by corn marketing year. So this goes back to September 1st, 2018. The latest numbers out of August 16th, 2019. The green line is last year's ethanol production. The red line is the 5-year average. And you can see the degree to which 2019 production in several weeks has dropped below last year. In fact, if you project out for the marketing year, we're producing 43.5 million gallons per day. 43.5 million gallons per day. Last year, 44 million. This is the first time in the biofuel era that U.S. ethanol production is lower than the year before, except the drought of 2012. That pulled back U.S. ethanol production in that year. But except for the drought year of 2012, this will be the first time we've seen ethanol production in this country lower year over year. So we're certainly experiencing a maturity in the U.S. biofuel industry. That ethanol industry is not growing certainly at the rate that we were in the past, and there's a question, is it growing at all? And a real problem with that is this. Those are the projections for U.S. motor gasoline consumption. You see that chart begins in 2017 and where the Energy Information Administration thinks we're going to be in 10 years. That's not a positive chart for the U.S. biofuel industry, because what we do with our ethanol is we blend it at 10% of the level of gasoline we consume. And so if we're consuming less gasoline, that would point, unless there are other demand factors, which there could be, higher blending rates, increased exports. Certainly there's opportunity to grow that industry elsewhere, but when it comes to domestic consumption, there are certainly some concerns, as we have vehicles that are more fuel efficient, an increasing number of vehicles that don't run on gasoline at all. As electric vehicles become more popular, become more common, some of the factors that we will be facing moving forward when it comes to gasoline consumption in this country. Our ethanol plants are losing money. This would show the degree to which their revenue is below their cost. Revenue would be the black line, variable cost, and then their fixed cost associated with producing a gallon of ethanol. Those companies have not made money the last 3 years. And so they're struggling with profitability, even with lower corn prices, lower grain sorghum prices. So that industry is certainly have some shuffling that's likely to take place, some reorganization within the ethanol industry in this country. Exports. That is a brief timeline, and I don't know if you can read those boxes or not. Yeah, not really. Those boxes are the timeline of the current trade dispute, primarily between the United States and China, beginning in April of 2017. That's when the U.S. opened an investigation of whether there was an illegal dumping of steel and aluminum into this country. Then in August of 2017, the U.S. started to raise the concerns of unfair trade practices with China. That was in August. Then we get to the third box. In January of 2018, the U.S. announced tariffs on imported solar panels and washing machines. So we started to see the escalation of the trade dispute with China. And then finally, not finally, the next step, February the 4th, 2018, China announced that they were going to investigate whether there were anti-dumping allegations against U.S. grain sorghum. February the 4th, 2018. The chart below are weekly sorghum export sales. Following that February 4th announcement, export sales for the marketing year were done. We basically sold no more sorghum that year. That was the end of that market. That was very near USDA's projection for the year, but that was it. And if you're interested, that very brief timeline, I have a chart that has much more information, and that timeline updated as of last Friday. It takes 2 charts now to present all that information, but if you'd like that, I'd be glad to share that with you to have more of a big picture of what's going on in that current dispute. And so there's what's happened to grain exports from the United States. You can see the drop-off after the first quarter of 2018, when China left the market. Down came our grain exports, and we haven't recovered. Now, we are seeing a modest increase of exports going to places like Europe, and even China has emerged to some degree over the last several weekly export reports, but certainly a completely different world for grain sorghum when it comes to our export markets. So, back to our price expectations and the price relationship. This is the chart we looked at earlier. The average price is for sorghum in red, and corn is in green. Now, I am going to subtract the corn price from the sorghum price. So I'm going to take sorghum minus corn. to demonstrate then at those points in time, there are areas of this chart when grain sorghum trades at a premium to corn. Most of the time it's at a discount, but there are times in that price chart when the price of grain sorghum is actually higher than the price of corn. And that's what that looks like. So when we're above zero, the relationship is positive. Sorghum minus price. Sorghum is trading at a premium to the corn price. Sorghum minus corn is negative. Then we see corn trading at a premium to grain sorghum and sorghum at a discount. In terms of that price relationship or what would be going on in terms of economic theory, we might explain that as a situation of there's a consumer preference. There are some quality or attributes of grain sorghum that buyers are desiring in advantage to corn. And so they're willing to pay a premium for grain sorghum in this particular environment, and we would call that a demand pull market. The market is demanding something particular about grain sorghum in that environment. Typically, the relationship is one in which grain sorghum trades at a discount to corn, and on that basis, grain sorghum is trying to be cost competitive. It's a low-cost substitute for what's going on in the grain market. That's a monthly chart. That's what it looks like on an annual basis. So the previous chart was monthly. This chart is on an annual basis by marketing year. And you can see there are a few marketing years at which grain sorghum has traded much more closely to the price of corn, or in fact at a premium to the price of corn. And to explain that relationship, when does that happen? When do we see that demand pull for grain sorghum? And going back to 1990, we've seen that from exports. When we see exports on the rise, that begins to draw that premium in the cash grain sorghum market. When we see those exports then start to fall off, that's when we see grain sorghum relative to corn getting cheaper and cheaper and cheaper. And the most dramatic example of that, 2014, 2015, 2016, a surge in exports to China, a surge in that premium when it came to U.S. grain sorghum relative to the price of corn, and then down have come the prices since that time. I'm very interested in the conversations around this meeting. What are those demand pull markets that are available for U.S. sorghum? Are there opportunities in the export market? Many of this room can tell me that. Are there opportunities when it comes to grain sorghum as a feed grain? Are there characteristics and qualities around grain sorghum particularly that would create that demand pull environment? How about a food grain? Whether it comes to consumer food or even in the fuel category, are there attributes around grain sorghum, maybe as an advanced biofuel or some other components, that would create that demand pull situation for grain sorghum that might, again, bring us back to that higher price relationship when it comes to corn? Looking now for 2020 and what the U.S. sorghum industry might look like moving forward, this is a chart of grain sorghum acres going back to 1980. Dominated, of course, by Texas and by Kansas, but you can see the contribution by other states. Any other state in the United States besides Texas and Kansas, we pretty well lost our grain sorghum markets, or planted area for grain sorghum. What then would be factors that will influence the level of plantings for 2020? What could we expect for next planting year when it comes to grain sorghum? The red line is actual planted acres. The dotted red line is the downward trend we've seen over that period of time. The dotted green line is a model that I've created trying to recognize or replicate those turning points in planted acres, what drives them up or what pushes them down, and then some kind of forecast for 2020. That model has four components basically. One is there's a downward trend. There's no question. Since this is going back to 1992, we're seeing that downward trend in sorghum prices. But then the second component of that, with a relatively high probability of influence, is that spread between corn and sorghum. In other words, if you give U.S. farmers a premium or narrow that spread between sorghum and corn, they'll plant sorghum. There's a positive relationship between that spread and the number of acres of sorghum that are planted in the next year. So give me a positive grain sorghum price relative to corn this year, I'll plant more grain sorghum next year. That explains some of that variation in that model. The other factors, the price of corn, doesn't even matter. Virtually no significance in the model. So what the price of corn does by itself is not the determining factor. What matters is the price of grain sorghum relative to corn. The other factor might need a little explanation. It is significant at the 2% level. There's a negative correlation between how well my corn did this year. So if I'm disappointed in this year's corn yields, I'm more likely to plant grain sorghum next year. What that reflects is we've pushed corn and soybean acres and cotton acres in a lot of areas that are probably better suited for grain sorghum. More stressful environments, less predictable in that growing environment. And so if I'm disappointed in that corn yield, that may be that incentive that I need to, I probably ought to go back to sorghum. It's a little bit of fit for my farm. And it is significant in this model. So the degree to which that I'm disappointed in my corn yield this year, I'm more likely to go back to plant grain sorghum next year. Not a perfect model, not a perfect fit, but it perhaps does provide us some direction of where we're going. So where are we going? Right now, grain sorghum is trading at a discount to corn. We are not seeing a positive influence from that demand pull component for 2020 at this point, unless something were to change. A disappointment in corn yields. It looks like Kansas and Texas for corn yields this year. Texas is doing very, very well. Looks like our grain sorghum yields are going to do pretty good, but our corn is actually doing very well. Also, Kansas may have some problems. They have a larger percentage of the corn crop in Kansas that is in very poor condition. So the jury is still out on what we might see in Kansas for that particular portion of the model. So in other words, at this point, I don't have enough information to plug into the model to change us off of the trend line, which would leave grain sorghum acres for 2020 about where they are right now, based on the information we have today. So to wrap all that up, what do I think the feed grain market looks like for 2020? I think we will see in the United States, if the current trade environment does not change. In other words, soybeans are still under pressure because of the lack of the export market to China, that we're going to see corn acres go up in this country next year. We had a lot of corn acres this spring that did not get planted because it was wet or got planted in less than ideal conditions. And I think we'll see a rebound in corn acres next year. And if we see, so corn acres are likely to be higher. I think energy feed use could be up with higher livestock numbers, but there's more competition, particularly from wheat. So that doesn't necessarily mean corn and sorghum for feed will go up, but I do think energy feed as a whole will likely be higher. Fuel use does not look positive at this point. There's not a lot of growth that I can see in that biofuel industry from this point, again, unless something were to change. Exports are down. We're seeing increased global competition, and we're seeing the volume of world trade is starting to plateau. And again, that's not good for U.S. contribution to those markets. So I'm looking at the U.S. corn stocks to use ratio to go up and the corn price to go down. Higher corn acres next year, again, based on weather, jump in here. But if we have normal weather, more acres of corn next year, limited demand growth, I'm looking for lower corn prices next year. That would mean lower grain sorghum prices, if that relationship were to hold. My greatest concern is with the global economy and the increasing risk of a recession, not only in the United States, but in many economies around the world, as intertwined as we are. And so I think that's a great concern, and certainly the degree to which we have disputes and disruptions, and then just the uncertainty around those relationships is not a positive thing for economic conditions and economic growth. And of course, then weather will be the greatest influence over any of that particular outlook. But again, I have concerns from the farm economy for 2020 given this scenario. So I appreciate the time. I would be glad to take any questions that we might have right now, or certainly be around for any other conversation later.